This video is for informational purposes only and does not constitute financial advice. Always do your own research.
This is Coin Picker, fully, where global markets meet clear, powerful insights. Welcome back, everyone. You're watching Coin Picker, Stream, your daily source for gold, markets, and breaking financial news. Lower interest rates weaken the US dollar, and gold responds almost immediately. Historically, every major Fed easing cycle has triggered a strong gold rally.
In 2025, markets expect the Fed to begin cutting rates. The setup is forming again. The question is not if gold will move, but how aggressively it will move this time.
The chart shows a clear bullish structure above the 4,000 level.
Gold is currently finding strong support between 4,000 and 3,430, major liquidity zones.
If gold holds above these zones, the bullish structure remains intact. The first major resistance level stands at 41.15. This is where momentum will be tested. Breaking above 41.15 opens the path toward the next barrier at 42.45. Once 42.45 is broken, gold has a clean runway toward 43.90, the next major target. Smart money often positions before Fed cuts, not after. The real move begins early. Compression patterns suggest accumulation is happening behind the scenes.
This behavior matches previous cycles, where gold surged months before a rate cut.
The price action still favors an upside move, but volatility will increase.
The key requirement is simple. Gold must remain above the 4,000 support zone.
If 4,000 breaks, price may test 34.30 or even 33.20 before recovering. But as long as gold stays above these zones, the bullish trend stays intact. A typical Fed cut pushes gold higher for 6 to 18 months. The fuel is already building. If history repeats, the next major rally may be much closer than traders expect. Gold is entering a compression phase, a typical signal before a breakout in macro cycles. This pattern has appeared in every major gold rally over the last decade.
When price compresses while fundamentals shift, explosive moves often follow. A Fed rate cut amplifies this pressure and pushes gold into acceleration.
The 41.15 level is a key confirmation zone. Breaking it signals early momentum. A strong move past 42.45 marks the transition from momentum to full trend expansion.
Once gold enters expansion mode, it often pushes toward major psychological zones. The 43.90 level becomes the prime target in a bullish Fed cut scenario.
On the macro chart, gold still holds a higher low structure above 4,000. This structure supports the idea of continuation rather than reversal. Economic expectations for 2025 align with higher gold demand and lower USD strength. But traders must stay alert. Volatility spikes during policy shifts. During past Fed cuts, early dips were often traps for impatient traders. Gold typically rallies before the cut, not after heads or fade. Anticipation fuels the move. The deeper the compression, the stronger the potential breakout becomes. Price is coiling around the 41.15 region. A breakout here could flip sentiment quickly. Liquidity pockets near 42.45 suggest strong buying activity waiting above. If gold breaks 42.45 with momentum, 43.90 becomes the logical magnet zone. Failure to break these levels may push gold back into consolidation. The macro environment, however, still favors upward pressure as long as 4,000 holds. Macro cycles show that gold often accelerates once the first Fed cut is confirmed. Investors seeking safety tend to rotate into gold when monetary easing begins. This creates a demand wave that pushes gold through resistance levels faster than expected. But the opposite is also true. Hesitation around key levels slows the rally.
The 42.45 level remains the most important turning point for gold in the current structure. A clean breakout above 42.45 shifts market psychology into a bullish continuation mindset.
This is where traders begin chasing momentum, often entering late. Smart money positions before confirmation. They accumulate quietly during dips. Retail traders usually react only when price breaks obvious resistance. To stay ahead, focus on structure, not noise. Price action tells the real story. The current structure still leans bullish as long as gold remains above 4,000. Below that, 34.30 becomes the next key support, XAUUSD, a major liquidity pool. And if volatility spikes, price may test 33.20 before reversing upward. But historically, gold rarely stays below deep supports during easing cycles. In most cases, once the Fed begins cutting, gold starts a multi-month rally. If price breaks 42.45 and holds, the path toward 43.90 becomes highly probable. This is the zone where major funds typically increase exposure to gold. 2025 could mirror previous easing cycles, where gold surged for over a year. If history repeats, the next rally may be much stronger than traders expect.
Follow CoinPicker for deeper insights. We track every key move in gold and macro cycles. Stay ahead of the market. Subscribe now and follow CoinPicker for the latest insights.